Yeah. Yeah, I would do that. Why not? Sure, that's the way to go. Yeah. Yeah. Yeah, well, I'm definitely going to relay that because it's great news. So I'll let the public know. Okay. What'd you say your name was again? Muir? Spell that. M-U-I-R. Muir. David Muir. Okay, David. Right. All right. Thank you, David. Well, I'll relay the news. Thank you. Bye-bye. So I was just talking to a friend of mine from ABC News, David Muir, and he suggested that I share this great news with all of you. But the big news of the day and the news of the past month or so is that the Federal Reserve had their meeting today and cut federal funds interest rate down 0.5%, half a point. So this is the first cut in 4 years, and it comes after many, many rate hikes have been made in an effort to curb spiraling inflation. Just go to the grocery store and I think you know what it feels like. And we're all feeling that. Whatever business you're in, whatever lane you're in, it's consumer that has felt that, and the public. And in this year of an election, we had a funny feeling they would get this under control, and they did. So this cut moves the rate to an effective range of 4.75 to 5%. This will have a positive effect on all of us as consumers and business people alike. It'll help lower borrowing costs for us all on mortgages, credit cards, car loans, actually any type of loan out there. And better news is on the horizon as more cuts are anticipated by the end of the year. Inflation remains low, and if consumers spend as we expect they will by the end of this year, certainly at holiday time, it should be good and bode well for all of us this year and into next year. For those thinking how this will be reflected in the housing market, as I feel and fellow agents out there will be looking at and concerned with for our clients, here's what it means to them and what it means to you perhaps. Lower interest rates will lower the cost of borrowing money, making homes more affordable, making mortgage payments more attractive to you, the home buyer, if you're in the market to buy. This will lead to increased demand for homes, but it's a double-edged sword for the public because as buyers will have increased purchasing power, which in some cases means maybe 2 weeks ago you could afford a $300,000 mortgage. As of today, after the rate cut happened, it may be you can afford a $400,000 loan. Yep, you could have $100,000 more purchasing power on average. Somebody else may have a $200,000 more purchasing power. But this means more house, better area, perhaps better school district if that's your desire, maybe stopping you from renting, maybe pushing you out of your parents' basement and out of your cousin's Ford Escort, perhaps, maybe get you back into a house of your own. So on the flip side, this will lead to more activity in the marketplace and perhaps maybe higher prices. So while that's good for buyers with the purchasing power, it's also good for sellers as prices will be rising, which won't be great for buyers, but that's what we believe is going to happen. So as the Higgins team has been spending the past few months explaining to people that now is the time to buy, this is kind of a sweet spot right now. We knew that for the past 5, 6, 8 weeks, it's been that way. And we knew that this rate cut was coming because the rate price drop has already been factored in. The lower mortgages were in place because they knew this was coming. So this anticipated drop today was just already talked about for the last month. So just to give you an example, if let's say we're talking about a 6% interest rate today, don't forget it's not too long since they were over 8%. Just back last November, rates were over 8%. So that's a huge drop. And when the old adage says the best time to plant a tree was 20 years ago, the second best time is today. It's the very same for the mortgage world and the home buying world. This is the time to plant a tree. This is time not to rue your opportunity of yesterday. Take advantage of today. Call us at the Higgins team. We'll help show you how to make home possible. Or if you're at a different stage in life and you already own the property, ask us to evaluate your present home. And maybe we can surprise you with your newfound home equity, because I promise you it's increased from when the last time you looked. And perhaps you'll cash out, move up, move down. It's your money to do as you please, and we're here to help. All right, Tom Higgins, the Higgins team. Thank you.